Companies can unlock a lot of value by reducing their days sales outstanding. A lower days sales outstanding frees up cash, reduces financing costs by shortening the cash conversion cycle, and results in a higher collection rate. Let's discuss each of these benefits in more detail, and we'll start with freeing up cash. Accounts receivable can be viewed as cash that is trapped on a company's balance sheet. By reducing days sales outstanding, a company can free up that cash. The cash can then be used to finance growth, pay off debt, invest in securities and earn a return, make a distribution to shareholders, or improve liquidity for market shocks. Remember, giving the customer an additional day to pay their bill is no different than giving the customer an interest-free loan. And the more free financing you provide to customers, the more cash will be trapped on your balance sheet. You don't earn a return on cash tied up in receivables, but instead incur an opportunity cost. Thus, it makes sense to accelerate cash collection. Now, a second benefit of reducing days sales outstanding is that it shortens the cash conversion cycle. The cash conversion cycle is also known as the cash-to-cash cycle, and it's the number of days between a company pays its suppliers and receives cash from customers. Thus, a longer cash conversion cycle means a company will require more financing. The cash conversion cycle is calculated by adding days sales and inventory to days sales outstanding and subtracting days payable outstanding. Thus, reducing days sales outstanding reduces the number of days in the cash conversion cycle. This is a critical benefit, as some companies get stuck borrowing money to finance inventory because their customers take a long time to pay. Those companies are incurring financing charges because they failed to optimize their days sales outstanding. If they could reduce their days sales outstanding, that would shorten their cash conversion cycle and reduce their financing costs. For example, let's say it takes a company 30 days to sell its inventory. Once the inventory has been sold, it takes the company 40 days to collect cash from customers. Now, if the company has to pay its suppliers 25 days after acquiring the inventory, the company's cash conversion cycle would be 45 days. This means that when the company pays its suppliers for the inventory, it's still 45 days away from receiving cash for that inventory. Thus, the company needs to finance the inventory for 45 days by borrowing money, raising capital from investors, or using capital the company already has. But each of these options is costly. Lenders will require interest, investors will require a return, and the use of the company's own capital will result in an opportunity cost. But let's say that somehow the company could reduce days sales outstanding by 5 days. This would shorten the cash conversion cycle to 40 days, and the company would require less financing. Now, a third benefit of reducing days sales outstanding is that it can result in a higher collection rate. The longer a company waits to collect payment, the less likely it is to receive the money. For example, let's say your company waits 3 weeks after providing services to bill a customer. Later, your company learns that it sent the invoice to the wrong mailing address and it has to send the invoice again. As a result, the customer doesn't receive the bill until a full 6 weeks after you provided the services. Now you might be thinking, no big deal, so the customer pays the bill a little late. But what if the day before the customer received your bill, it found out that it had defaulted on a large loan with its bank? The customer will be more concerned with the bank loan, so it might put off paying your bill. And if the customer ends up declaring bankruptcy, you might never get paid. Thus, by failing to collect payments in a timely manner, you increase the risk of credit losses. But if you can reduce days sales outstanding and collect cash more quickly, you increase the chance of receiving the money. In the next video, we're going to change gears, as I'm going to show you how to analyze days sales outstanding for a group of companies. Now, if you'd like to receive my PDF guide on days sales outstanding, along with a days sales outstanding calculator and spreadsheet, you can sign up for my email list using the link in the description section below. You can also receive the PDF guide and spreadsheet immediately by becoming a supporter on Patreon.